Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading satellite office down in sunny South Florida. Today's date is Wednesday, January the 2nd, 2013, and here is today's After the Bell market summary. We want to first start off by taking a look to see how the indices closed here. The Dow Jones closed up 308 points. The Nasdaq closed up 87.33, and the S&P 500 closes up 36.23 points here. Strongest index across the board out of these three was the Nasdaq, up 2.89%. If we take a look at the breadth here on the market, we had 5,653 issues advancing. We had 761 issues declining on the NYSE, Nasdaq, and Amex. Another 5-to-1 plus breadth today in favor of the bulls. So we had two back-to-back days with strong buying pressure, as the breadth has been 5-to-1 in favor of the bulls across the board for the past 2 days. I would expect some type of pullback, and we're going to take a look at the charts to see what's going on. But again, we could probably still have some momentum in the market. But if you're, in other words, when I say expect a pullback, if you're looking to put on a low risk trade, you're probably going to be looking for a pullback or some type of sideways consolidation to get a better low risk entry on some plays here, as a lot of stocks gapped up today. So let's take a look at the SPY. SPY daily chart. SPY was up $3.65 today, up 2.56%. You can see here we're back above this key trend line from this downward channel that was in play, and now it's not in play anymore. But we are back above that key trend line. So now, as long as we hold above that trend line, we're going to be looking for a pullback, maybe somewhere back in this area, maybe some type of high base that forms. But if you ask me, it looks like the SPY wants to go back up towards these highs. 147.23 is a next level that I will be watching here. 137.20. Sorry, 140. Let me get the level right for you guys here. Looks like we're looking at 147.26. Actually, I think I have the drawings here. Okay, yep. So 147.17, and then the high of this candlestick that we made from the highs of around the yearly highs. Last year's highs was 148.11. Okay, so that's going to be the next level to watch, 148.11. And those would be the levels that I would be watching in the short term here. As far as for resistance, as far as support goes, if we could get a nice little pullback back down towards, say, this 144 area, that would be good. And it could happen. It could happen. Some people maybe, look to maybe pop the market up a little bit more, then fade it right back down, and then that's going to be the good dip that everybody's looking to get involved in equities, as this has been a fast and fierce 2-day run that we have had. So, smart money's going to be waiting for some type of low risk entry, and that's what I think the best scenario is. I mean, you're going to have your little your little quick intraday scalp trades that are going to be out there from stocks that are going to continue and break past today's highs. And some of them obviously are going to sell off back below today's highs, and you're going to have to find the right stocks depending on what strategy you do intraday to see what you can find out there. I mean, again, you're going to have some stocks that are probably going to break past today's highs and continue. You're going to have some stocks that are going to break past today's highs and and sell off. Back below today's highs. You're going to have some stocks that are probably going to open up flat and sell off. So, I mean, these are different scenarios, and depending what you expect to happen tomorrow and how the future set up in the morning, what you want to do is focus on that one setup that you plan with the futures. Anyways, I'm talking a little bit too much here, but let's go ahead and take a look at the triple Qs. Triple Qs here. Nice little gap up. You can see where once we trap those shorts down there out that range, they're definitely feeling some pain. Anybody that got short below that little base break right there, and now we're back at the top of the base here, and we actually closed above it. As long as we could continue to close above this key level right here, which is coming in around the 66.22 level, all right, I would expect some higher prices here. If you take a look as far as resistance goes, key level to watch in the Qs is right here at 67.38. You can see this was prior support back here. We broke down below that level, and we got right back above it. Sellers came right back in, smacked it down right here. So this is a key area, the 67.38 level. If we could start holding above the 67.38 level, I would say we have 68.25 in the cards, and maybe even the 68 8 to 63 up here towards this little top of this little range. And the reason why I have this range highlighted is because there's a lot of price action going on in this area, in this little box from back here before we had a little breakout, back test held, and move higher. So you can see how this is a relevant area that we're coming into right now in the triple Qs. Let's take a look at the IWM. The Russell 2000 has made all-time highs. I don't think it has made all-time highs on this IWM ETF, which it is around 86.96. Sorry, that's not correct. Hold on one second here. All-time highs in the IWM is right up here around 86.81. Today we hit a high of 86.91. So yes, the IWM as well with the Russell, made new all-time highs. The reason why it could be different sometimes is because obviously this is an ETF, so sometimes things get a little bit priced different inside of here, and therefore the index is just index. But yeah, they both made new all-time highs here. It's going to be pretty interesting to see if this pulls back a little bit, consolidates up here. And that's pretty interesting because the TNA has been showing relative strength like we've been highlighting in the videos here. The TNA has been showing relative strength compared to the other indices for the past 2 weeks or so. So this is pretty interesting to see now that the reason for that, the Russell is right here at all-time highs. That's going to be good for the small cap stocks. Let's take a look at the dollar futures, see what the dollar is doing. Dollar's actually holding up pretty well, actually getting stronger. You can see the dollar here has had 1, 2, 3, 4, 5 consecutive higher high closes. I should say 4. I think this is for tomorrow's action right here. This bar is for tomorrow's action, but the dollar has had 1, 2, 3, 4 consecutive higher high closes. So that's pretty interesting, and the market's still holding up pretty well. So we could be seeing some type of disconnect here. Let's take a look at the euro dollar. All right, the euro dollar is still a little bit toppy up here, coming to some of our key trend lines up here. May pull back a little bit more, back down, say, towards the 1.30 level. Let's take a look to see what the commodities are doing. Starting off with the GLD, gold is up $1.14 today from the gap here, $1.14, up 0.71%. You can see they spiked it up a little bit and sold it down near the lows. I like to take a look at the gold futures to get a better read. And you can see here the gold futures have been trading up pretty nice since our little call to watch gold for a pop-up around these key levels that we mentioned in the weekend review. In any case, gold's going to be coming into some resistance around this little level right here on the 1701 area, call it 1700. Until gold gets above 1700, you shouldn't get too giddy, as this thing may pop up here, then pull right back down and still continue those little lower highs that it's been making. So keep that in mind. Gold miners did break back inside that channel that we've been mentioning here. And if we can continue to hold above, say, 46.45, or even better yet, 46.45, I think we get some more upside attraction, as this could be a little air pocket that's going to be in play here. And, the miners are doing pretty well. Newmont Mining's doing pretty well. Again, they sold a little gap up in some of these miners today as they're gapping into some of these declining moving averages on the daily chart. GG's back inside this little downward channel that I have on it here. This channel's from connecting to these points right here. You got this little point, this inflection point, this inflection point. You get those 3 points, you draw a nice little relevant channel to work off of here. So in any case, let's go ahead and take a look at SLV. Yep, SLV, nice little gap up off that 29 level down there, held that pretty well. And let's see what copper is doing. Copper, nice. Copper is trying to break. Copper's back above this little key channel that we've been using as some nice inflection trend lines to work off of. And now we're back at this 375 area, which comes from this little resistance zone from back here in March of 2011 last year. Let me fix this trend line. Well, obviously last year. So in any case, keep that on watch. Copper's looking pretty good. I like SCCO. This is a stock I've been mentioning. Another copper stock aside from FCX. This one has a nice little downward bullish channel that it's breaking out of. You have your little A move here, your little B move, or this is maybe 1 and 1, however you guys look at it. In any case, you got your nice little up leg. You got a little pause right here, another little up leg, nice little bullish channel pause right here, breaks out, and now we're going to see if we get some continuation. If this thing could break past $39.44, it will be making new, it will be making a new 52-week high, which is pretty good. So that's around 39.50. So keep this one on watch as well. Let's see the 60-minute chart. 60-minute chart looks actually pretty good from today's action. Nice little bull flag on the 60-minute chart. Keep that one on watch. If the copper's strong tomorrow, this is one stock that you want to be looking at. So in any case, before I forget, I know we've got some Apple fanatics out there. We'll take a quick look at Apple. Apple still has a lot of technical work. Can't really get bullish on Apple or expecting some type of real turnaround on Apple until it gets back above this 570 level. You guys know that was a key level that we were watching for the breakdown. Why? Because some nice little key support from back here in June. All right, so therefore, you see how this was a key level from back here. Every time it got above it, they sold it down. So therefore, 570 is still a relevant level to work off of. Apple may want to go there. I wouldn't say tomorrow or this week, but possibly in the coming weeks. May grind sideways, get a little quick pop up there, and then come back in, or who knows. But just keep that level in mind as a key level on Apple, 570. Amazon's shaping up pretty well. Amazon's back above this 250 level, and it's not far off of all-time highs. All right, which the all-time high on Amazon is 246.11. We're at, sorry, that's incorrect. The all-time high on Amazon is around 264.11, and we're at 257.31. Okay, IBM's looking pretty decent as well. IBM, nice little downward channel break play here set up on the daily chart. Was just a downward channel break and go. And IBM looks to go and touch this 200-day moving average, 200-day simple moving average around 197.71. And I think it's going to break past the level, because then if we do, we have another little short-term trigger that should trigger in some more people looking to get long IBM if it breaks over this 198 level right here. So we have one trigger off of the longs that are looking to get involved if it breaks above the 200. And another trigger for some longs that are looking to see if it gets above this inflection point to buy, as they're probably going to be expecting it to fill some of this little gap that it has all the way up here from a 210, from all the way gap down to 202. So this is a lot of opportunity right here in this little range that we have right here, guys. But at the same time, we have to see if we can get past this 198 level. And if we can, we hold it up above that level and we get back over 200. IBM could definitely go back up towards 210. You can see here from the closing prices at the bottom of the screen, this thing has been having a hard time trying to close above this 195 level. So the longer we continue to hold above 195, all right, and build some type of higher base, I'll start to get a little bit more bullish on IBM. Right now, it's just a little gap up, and out this little downward channel. We're going to see how it reacts going into the next couple of days here. So that's about it, guys. Just a little quick video. I wasn't in front of the screens for most of the day. We had a meeting down in Miami, possibly some business opportunities down there. So we got some good stuff going over here at wallstreettrading.com, guys. Make sure you check out the website. Again, it's wallstreettrading.com. If you want access to our trading room, you could go to our website, sign up for the 14-day free trial. At the same time, you could go to mywallstreettv.com, put in your email, and type in the password SMART. So once again, have a great day, and I'll catch you guys tomorrow morning, bright and early at 8:20 a.m. in the chat room. Cheers.